What is up, everybody? Welcome to my YouTube channel. My name is Sophia, and I'm an options day trader who has been trading for 4 years now. In today's video, I'm going to be going over my A+ entry setup and the entry model that has helped me make these sort of gains on trades. So if you haven't watched my strategy video, though, I suggest you go and do that first before watching my A+ entry model. But anyways, let's get right into it, guys. Thank you. Today, we are talking about my options entry model and exactly why I enter my options trades. So first things first, again, base it off my strategy. I mainly trade off support and resistance levels with supply and demand zones. So first thing you have to do is mark out your support and resistance levels, mark out your supply and demand zones. If you don't know how to do that, watch my previous video because I'm not doing it in this video. Anyways, once we have those all marked out, and you have to mark these out pre-market. If you start marking them out while the market's open, just stop trading for the day. There's no reason to do that. Mark them out pre-market and make sure you have all your levels solidified. You have them there and you know they're actually clean levels. So now once I have all my levels marked out and we have a clear structure and I've determined my bias for the day, I've determined where I want to see the market go. Then I start being selective with a few names that I'm watching for that day, and I normally pick those names out pre-market depending on what type of moves we're getting and what the volume is looking like. Volume is really important as well. So now the market is open. Now I'm waiting to see an entry, and again, I'm going to show you guys this on a chart. This is kind of just like my entry model condition list, like a checklist almost of what you need to do. But I don't really wait for breaks of support and resistance levels. Obviously, when we do get breaks of those levels, it's, a great entry for a trade. But I also trade off of bounces on support and rejects off resistance. Because I use supply and demand zones within those support and resistance levels to see when it's actually valid to enter a reject or a bounce on a level. So when I see a bounce on a support level, I wait for us to actually exit the demand zone that we're currently stuck in. Then I would look to take calls. If we are rejecting a resistance level, I would wait till we break out of that supply zone, and then I would look to take some puts. And obviously would have to wait for full confirmation of that. But if I'm trading off of a break of a level, if I'm trading off of a bounce or reject off of a level, the number one thing I have to do is wait for confirmation. I am watching the 5-minute chart. I do not watch any lower than the 5-minute chart to get my entries on trades, because that is where price quickly reverses on you if you are watching lower than the 5-minute chart. If you trade futures, very different, not the same thing. But I'm talking about individual stocks when I'm trading my day-to-day Tesla calls or puts or MSTR. This is what I look for and this is what I wait for. You must wait for confirmation when trading individual stocks. So 5-minute, either one, I wait to see a 5-minute candle close below a supply zone signifying that we got a reject on resistance, or I wait till we get a 5-minute close above a demand zone to signify that we got a bounce off support, or maybe we broke above a resistance level. So now I'm waiting for that 5-minute candle to actually close above there to be able to enter calls, or maybe we got a break below support, waiting for that 5-minute candle to close below support and then get in on that. And also, if you think that you've missed an entry, it is also very valid to wait until price taps back into that area, which is something we often see, is price tap back into that area and then make its way down, which is why waiting for confirmation is so important. But another thing to just note real quickly, important thing to note, and as was written, don't catch falling knives under this confirmation. Don't catch falling knives. If we do get a heavy, just break straight through a support area without like retesting that breakthrough support. That's generally not what you want to be entering, because that is you trying to catch the falling knife or just falling through. And usually when that happens, we probably, got some bad news, something, Trump released more tariffs. I don't know. So you do not want to be entering on something like that if we do break below a support area. And my stop loss for options, it's a little tough to base it on structure like you would do with futures. And again, I don't use this strategy for futures. This is solely for options. But stop loss is harder to base on structure with options, because if it breaks your structure, you could then be down 50% on that option, and no one wants to be down 50%. So normally I will just set my stops around negative 25% or more or less, depending on the exact position that I'm in. If it is a more risky position, I will one size down and I will set my stops a bit tighter so I don't have that, risk of losing out of that position if it is riskier. But again, setting your stops based on structure is a little bit more difficult for options. But yeah, once price, let's say I'm not stopped out of my option, but price has now closed through my zone and my entry is now invalidated, I would then exit. I wouldn't just wait for price to hit my stop. That would, be a telling sign that I would exit. And choosing your contract, so this depends on you. And again, the Greeks, if you haven't watched my video on the Greeks, on the basics of options, please go watch that. But this is really dependent on you. When I'm trading QQQ, I will usually do 0 dates or 1 day out, QQQ or SPY. And then when I'm trading my individual stocks, Tesla, Amazon, Apple, all those good stocks, I will normally trade weekly contracts, so contracts that expire every Friday. If it's a Friday, I guess I'm trading 0 dates. That's just what happens. But slightly out of the money strike normally is what I will go for, depending on what I'm entering exactly. Again, choosing your contract is more based on yourself, but this is kind of how I choose my contracts. Only take contracts are liquid and priced well for RR. So that is super important. You don't want to be taking a contract that is going to cost you $10 and, now you're risking, maybe you're taking 3 of those contracts. Now you're risking $3,000. And you don't want to be taking that to have a win rate or trying to, reach 10% of that play. Why the hell would you try to do that? You need to have at least, I would say, 2 to 1 win rate on your options plays. There has to be more reward than risk. But anyways, and then exit. Ideally, I like to exit at clean levels. That's not always going to happen. That's not always going to be, the way it goes, obviously. But normally I will enter in with a good amount of contracts. So once my position is halfway to take profit, halfway to the, next area that I'm looking to see on that stock, I will take out most of my profits and then I will continue to trim some off until I see that area. Moving my stops to break even, that's the most important part. Once my contracts are in profit, those stops are getting moved to break even. So now the most important part, let's go look at this on the chart and see how my entry would actually work. All right, now I'm going to show you guys an actual entry that I would have taken and how I would have used this exact model. So first of all, I did mark out my levels pre-market. This is on the 5-minute time frame, so this is a level that was, taken from the hourly time frame. And then I also did mark out this nice supply zone that we have as well on the 30-minute time frame. So make sure to do that or watch my other video of me doing that, because I don't want to make this too long. I want to show you guys the exact entry model. So you may be wondering, we look like we're about to break through my level. So we actually do break through my level. I already know what happens this day. But anyways, we actually do break through my level. but there's a reason I wouldn't have taken a trade through a break of that level. So as you see here, we continue to just sit within this supply zone quite literally all day with no actual, as you see, break and hold under this level. We've gotten continuous breaks, but not a candle closure below my level. If we saw a candle like this, that would be a reason for me to enter shorts. But since we were continuously choppy and sitting within this supply zone, why the hell would I enter? I would wait it out. So this day I already knew coming into it, volume was low, we were going to be choppy. That is something you have to take into account before you even try out an entry model to any trade. You have to be able to know that and know your daily bias. So anyways, if we do continue it, and obviously I can't try to replay options, unfortunately, on here, but soon here we will see a break and hold below this level. And I will show you guys exactly where I would have taken entry on that. Okay. I would have taken entry a lot sooner. My entry would actually be up here, but replay mode is so stupid on TradingView. I literally hate it. Anyways, that is, or you know what, let's just, would have taken my short entry once we saw this candle close below here. Now let's sell. And if we do continue, awesome. We got that really, really nice downside. Obviously today, I mean, I'm not going to lie to you guys, this was mainly also due to, you know, war news with Israel and Iran. So that is why we got so much downside. Once we broke below here, normally I would be expecting, you know, back down to a previous level. So probably around this 530.90 to, you know, 530, lower 530 area. That's it. That is somewhere where I'd be expecting to take profits on a break of my level right here. But since we did get war news, you could have for sure held those and got a continuation. And I wouldn't say something like this is a falling knife. It was actually a pretty valid trade setup. But I kind of showed you guys, you know, two ways that this trade could have went. In the first way, in which it did not work out at all. So market opened up. We immediately were kind of making this weird choppy movement. Could you try to argue that down here we might have a support level and you take a bounce off this and get tapped into calls? Maybe, but that's not nearly enough confirmation, at least for me to be able to take calls. Because then what do? We go up about $3 or so, and then we just chop around. And I knew that was going to happen, and that is exactly what I waited for. I didn't try to rush an entry on the break of my resistance level. I waited it out because, again, the most important thing to any strategy is actually being able to read price and read how the markets are moving. So just to like clarify and show you guys, marked out that nice level on a higher time frame, on the hourly time frame, and we had a very nice supply zone within this area as we've gotten. We'll mark that on the 30-minute. So if we go to the 30-minute, slightly better presentation. But as we've seen, you know, multiple times, this supply zone, these areas where we've just gotten chop in between, and also obviously this 532 area level marked out nicely on the 1 hour as well. So all those levels and zones are taken from higher time frames, which I explained in a previous video. And this is my exact entry model. Waiting for confirmation and being able to read price is super extremely important. So if you guys have any questions, you know where to find me. And if you want to come trade with me, live trading, actually learn in depth where I have my class sessions and do real-time teaching, make sure to join my Discord. Link is in bio, or I will also link it in this video most likely. But anyways, it is now, okay. Anyways, it is now late and I must go to bed. So Thank you guys so much for watching, and I will see you all later. Goodbye, everyone.